Thank you so much. Now we transition straight into the next session, which is about restructuring blended finance mechanisms for water. And we are going to have another array of speakers with field experience who are going to, inshallah, give us another food for thought. And to moderate this session is our great friend and colleague, Ahmed El-Mahdi, the Regional Director for the Middle East and North Africa from Green Climate Fund. So we are going to hear a lot of green today. Andrew, yes. So can we give him a warm applause, and also I will hand over the microphone to him so that he can invite the panelists and continue to lead us in the discussion. Thank you so much. Yes. Yep. Thank you.
Assalamu alaikum. Good morning, everyone. So it's my pleasure to run that session with you today, like session number 6. So before I give the intro of the session, I wanted to invite our panelists. So I'm glad to have that discussion with the panelists, and of course here as well from you. So if I can invite Dr. Yasmin Siddi, the Director of Agriculture, Food, Nature and Rural Development with ADB, Asian Development Bank. And also we have, I hope we join online by Kabir Kanonga, Director of Private Equity and Fund Development at And here on a stage, we would like to invite also Dr. Adnan Aziz, the Chief Program Officer for Global Islamic Finance Program for Climate, Nature and Development. And we also have Dr. Daulat Abiparu, Director General State Company, Water Solution, Ministry of Water Resources and Irrigation for the Republic of Kazakhstan. And we have also online Adri Asmora. He's the head of Public Financing Division, BTSMN. And finally, on the stage, Dr. Asmail Tasmi, Director of Cooperation and Communication, National Office of Electricity and Drinking Water, Morocco. So welcome, our panelists. It's really glad to have that discussion with you on restructure blended finance. I think yesterday we have discussed like several elements. I think we started by restructuring finance, but also talking about Islamic finance, PPP or private-public partnership, and also bond as well. I think today we will try to dive deep with our panelists here and colleagues online as well to discuss really like blended finance. I think what we can see also, blended finance has been recognized as a way to blend really like public sector with the private sector in a way to take that risk sharing and also mobilize private sector. But I wanted to take it like for more big questions. Because like if we look at the current economy landscape, we understand like public finance are tight, maybe declining as well. And private sector has plenty of money, but they are reluctant to invest. And if we look at the blended finance as one of the vehicle or mechanism that can really mobilize private sector, we need to ask ourselves, why it doesn't work? And what are really the key challenge with the blended finance? And do we mean by blended finance, is it public-private finance, or it's a blended finance in terms of different financial instruments like equity, guarantee, bonds, concessional loans, grants, or it's a blended finance where we just focus on public and private finance, or it's a blended finance where we look at can we blend different finance, like can we blend Islamic finance with climate finance, with public finance, with private sector. I think like we are very glad to have the panels that really bring different views from MDBs to private sector to public sector to applications as well, to try really to tackle those type of questions. I don't want to take much time off with that introduction because I want to use most of the time really to get the insight from our panelists here. And if I can start by putting this frame question about like why blended finance has not been implemented at scale in the water sector until now, and how could that change? And what change in the global finance architecture that could be really supporting the scaling up of the blended finance for water? And I wanted to ask Dr. Yasmin Sadiq to tackle that question and share her insight with all participants here today.
Thank you so much, Mr. Amgad. And before I start, maybe I'd like to just thank OECD and IsDB for this opportunity to share perspectives from Asian Development Bank. I had three broad sections to what I'd like to share. Firstly, just to give some contextual background to the discussion, much as you've shared. Secondly, to provide some practical examples of the type of work ADB has been engaged with. And thirdly, perhaps some reflections. So as many of you may be aware, the Asian Development Bank is a regional development bank covering Asia and the Pacific. And the topic of this session very much resonates with our role, which is to provide public sector and private sector financing in the form of concessional lending with a long tenor, as well as providing that opportunity to cushion risk or to manage risks better to be able to catalyze the private sector. ADB typically has an overall commitment around 24 billion last year, which includes loans, grants, and investments, both from sovereign and non-sovereign side. But importantly, one of our biggest areas of financing is the finance sector, and specifically private sector financing. So this topic is highly relevant for us. I'd just like to, before we start, maybe take a quick poll. And I was sharing with some of the colleagues yesterday that maybe we could do a hands up to understand how many people are from the water sector. So if you're from a water sector background, could you please put your hand up? Okay. And if you're from finance sector, please put your hand up. Oh, interesting. Okay, very good. So I'll come back to this at the end, why I've asked that question. But firstly, just on the background context further, I think the OECD report that was provided on making blended finance work for water and sanitation provided a very important feature, which was about the opportunity of blending concessional funds with commercial capital to reduce risks, improve project bankability, and drive investment into infrastructure to address the global water crisis. And I would say this is exactly where a regional development bank plays a vital role. The report specifically stressed on looking at opportunities for enhancing policy frameworks and developing the capacity of local institutions. And Mr. Amgad, I would suggest that probably that's one of the first points, that as a development bank, we have the opportunity to work on creating that enabling environment. And I'll illustrate that with an example shortly. We all discussed yesterday and listened to the risks at the sector level. And even when I was preparing for this event, I asked our colleagues across a range of departments, including our urban water colleagues, our Office of Public-Private Partnership, and our private sector team and finance team. And very much those risks that were highlighted are what they shared as well. Very much about high political risks, low financial returns, the limited fiscal space. And I would say that that's an area we observe very much depending on which country we're working with. For example, if we look at our upper middle income countries, their borrowing appetite in itself is quite limited. And then you superimpose on that the risk in the sector. So you have that, what I would say is the double whammy of limited fiscal space, high risk environment. And this is where a development bank, of course, can play a role by bringing in some of the instruments that we have, not just through lending, but by supporting with technical assistance, which is grant financed, to open up that policy environment or to take assessments such as risk analysis to do diagnostics and try to unlock the challenges or constraints. So maybe those are just the two major criteria I'll pick out. But I'd like to jump into examples because, of course, it's always great to ground rhetoric with reality, which is what do we actually deliver on the ground? And here I've just picked up a couple of examples to share with you. And yesterday for us as well, many of us, which I would say is predominant in this room from the water sector, we learned tremendously about the bond market. So of course, ADB works very heavily in green bonds, and we have a framework within the bank as well. July last year was where we saw for the first time an investment by ADB in a certified green bond, which was issued by Georgia Global Utilities, which is the largest ever issued by a Georgian private entity and aims to modernize the water supply network in Tbilisi. This will ensure a potable water supply for about 1.4 million residents. And the financing was exactly that blended approach of $20 million from ADB's lending and another $20 million from a private sector infrastructure fund, which is managed by ADB. So this investment not just supported climate resilience in the Georgia context, but also boosted confidence in Georgia's capital market and promoted sustainable financing instruments in the region. So here's an example where a development bank can come in with its own efforts and add to that confidence with one of its borrowers. One of the most exciting examples we have, and I was discussing with Sophie this morning from OECD, is the tremendous expansion of our business line in financing nature. So this resonates very well with the discussion we're having over the past day and today as well. And in October 2024, ADB issued its first biodiversity and nature bond, which is a $100 million bond. It was purchased by Dai-ichi Life Insurance, and it was issued under ADB's themed bond for Sustainable Development Program. And this bond will help us finance projects across Asia and the Pacific. It helps attract private sector investment by offering a secure AAA rated investment aligned with environmental goals and enabling investors to support nature positive initiatives without compromising on credit quality. So again, for us, raising our own bonds has been a tremendous opportunity. And I must say, as someone from a water background, I've spent a lot of months learning about the bond market and how ADB raises its own bonds. The third example I like to give is a very exciting initiative. And at COP28 in December 2023, ADB launched its Nature Solutions Financing Hub. So this is an initiative which aims to mobilize at least $2 billion in investments for nature-based solutions. So tying in very directly with the discussions we're having here. It focuses on integrating natural ecosystems into infrastructure and development projects, and also enhancing climate resilience and biodiversity. And its aim is to employ financial instruments to de-risk nature-based solution projects, including guarantees, linked payments, and blended financing options. So I'm working very closely now with this Nature Solutions Financing Hub, primarily for projects in Central West Asia in agriculture, food, nature, and rural development. And we're looking at how we can leverage knowledge partners such as TNC or Worldwide Fund for Nature, IUCN, to bring in knowledge, plus ADB's experience and expertise in working with clients, some of whom are here on this panel, such as the Kazakh government, and also being able to provide that comfort level to de-risk the private sector partners that are potentially there. We have partnerships also with the OPEC Fund for International Development, French Development Agency, and the Saudi Fund for Development, which is co-financing in this hub. And this provides us the opportunity to integrate nature-based solutions into development projects, also to leverage innovative financing. And we're doing a similar initiative for a Glaciers to Farms program in Central West Asia and in South Asia. And ADB is leading that initiative with a very similar approach to this Nature Solutions Financing Hub. I think maybe I'm going to just stop there. But in terms of reflections, I'd just like to share also that ADB reorganized itself last year to be able to work more closely with our colleagues in the Office of Public-Private Partnership, Private Sector Development, and to initiate upstream private sector diagnostics. So helping us on the sovereign side understand where are the constraints to private sector investment, so that I now learn to speak the language of our private sector colleagues as well as our finance colleagues. And going back to the poll, the reason for asking that question was that unless we have some degree of bilingualism, coming from the water sector side, I have to have the ABC, at least, of finance colleagues and private sector to know when to bring in those colleagues, or to at least be able to illustrate my responses to our clients on the sovereign side with some elements of financing options, financing solutions, and private sector solutions. And I'll stop there. Thank you.
Thanks, Yasmin. I think it's great to see that highlight from EDB as one of the leading development bank in Asia for multiple sectors, but also the water sector, and talk about that project bankability, enabling environment, and the different example that really can help, including technical assistance, not just lending, which again, one of the key aspects that really encourage investment as well, and really support the project design to be more bankable as well. So taking this, I wanted to go to Adri Asmora online to really look at the blended finance from the perspective, like the blended finance heavily rely in public funds. And that to try to really mitigate the risk for the private sector. But unfortunately, what we see, like that actually lead to a low risk profile project. And that, of course, limit the type of project that can really access that type of blended finance. So I wanted to get insight from Adria Asmora from BTSMI about like how to restructure blended financing mechanism so that can really encourage investors to take more risk and of course support the water sector. But also what could be or what is the role of the National Public Development Bank as well from your side?
Yes, thank you so much, Mr. Moderator, and good morning. Assalamualaikum. First of all, I would like to send my best regard to all panelists as well as participants there, and apology for not being able to join offline. Yes, this is a very important question asked from PTSMI, so I just want to give you a little bit of sense of what we are. We are basically state-owned enterprises owned by Ministry of Finance. We are financing institutions. We are focusing on financing infrastructures. Similar to other type of national or domestic banks that focus on infrastructure financings, blended finance is the key, basically. we have an array of financing tools that basically support the private sectors, public sectors like local governments as well as local government enterprises. And we also what we call it advisory and project development facility. So blended finance, going back to blended finance, it's a key for us to basically bring in both private and public funds and then channels to the beneficiaries. With regard to water sectors, this is a sector that we've been very keen and also focus on since probably 5-6 years ago. And then going forward, this is also a sector that we would like to also help the governments, different level of governments, central as well as local governments going forward, to help them to be able to tackle dire issues in the sectors. I just want to give you some examples. We, as a national development banks, we basically not only working with the central governments, we also engage with a lot of MDBs like ADB, World Bank, and others. We also bring in donor funds, and then we pull into a platform, what we call it the SDG Indonesia One. So basically, under this platform, we channel some of the fund through on lending, some on through on grantings, right? So we help beneficiary in terms of project developments. We help them in providing credit enhancements, guarantees to make sure bankable and feasible projects. We also try to differentiate our clients, right? In water sectors, we're not only, as I said earlier, we're not only providing commercial financings, but we also are providing concessional financings to local governments, municipalities, right? Here in Indonesia, we have around 548 local governments, from provincial governments, municipality, and districts, right? So we have to tailor our approach to those governments, right? It's impossible to have a one-size-fits-all treatments. What we do, basically, we try to cluster. We cluster local government, we cluster our beneficiary based on their financial capacity, for example, and also what type of project that need our support, right? We can provide grant in terms of project preparations to make sure we can do syndication with private sectors. This one case. Another case, we issue bonds and then we blend with our equity and then we channel to different clients, right? With different pricings. Recently, we also create what we call it the sustainability link loan, specifically for water sectors. Indeed, here in Indonesia, in terms of local government, we have a very high fiscal capacity local governments like Jakarta, the capital cities. But we also have a very poor municipality like in Papua. So we have to come up with the solutions, right? In terms of policy support to governments, we have what we call it the SMI Institute, right? So we work together with the government, in this case, Ministry of Finance, Home Affairs, Public Works. We try to identify the handicaps, right, in terms of the regulations and how to move forward to support the local governments. So this kind of approach, what we've been working on. We also try to learn with other NDBs globally and also our partner MDBs on how to solve these kind of issues, especially on water sectors. Because in the end, we would like to focus not only on the local governments, on the private sector, but also on the community as well. So I think that's in summary what I can bring up for you before discussion going forward. Thanks.
Thanks, Adri. I think it's great to see how the national development banks can actually playing a role of mobilizing finance for for the water sector, and how you actually taking that tailored approach to work through your local context for the country and support the local government, but also in partnership with multilateral development bank like Asian Development Bank as well. I think that really take us to talking about like how we can actually risk that investment to be able really to attract the private sector for investment. And we have heard the word de-risking investment, but does really de-risking work? Does it really mobilize finance? Does it really allow that finance to be efficiently allocated? So if Kabil can go online, can you hear us?
Yes, very well.
Yeah, perfect. So I would like to get your insight about taking that de-risking. Does it work? Does it really mobilize finance? Does it really lower the risk? Does it really support allocating money for high impact project? So what are the barriers that really prevent the private investor for engaging in blended finance, of course, for water, and how we can really address this from your perspective?
First, just thank you so much for having me here, and please accept my sincerest apologies for not making to Jeddah in person. I really feel like I'm missing out, but I'm just happy to be here online. Let me start with something that I think we all know, but find it difficult to accept. Ms. Siddiqui referred to the OECD research in her remarks, and it clearly states that while blended finance in water has been instrumental, it hasn't scaled. Right? And the reason for that is not just risk. It's a whole lot of other factors that include the way we define it, the way we price it, and also the way we share it. We've spent years de-risking projects for private capital, but if all we do is protect investors and private investors from downside risk, we are not building better systems. We are just reducing exposure, right? So I really like your question around, de-risking and whether de-risking has helped or not really. My view as a private investor is that most blended structures today still funnel capital into low risk, low impact projects. They are commercially viable, but they are not transformational. They don't reach the underserved communities in the way they should, and they don't solve the tougher problems. So the answer is we just don't need more capital. We also need smarter structures. And this is something that at least we have tried to do in our work, and I can tell you about it as we move on. But essentially, I would say there are three barriers to this problem of private sector investment not coming into the water sector, and also what we can do about it. The first is the pipelines are extremely weak, especially in early stage. We see a real shortage of investment-ready projects, and this isn't just a paperwork issue, it's a structural issue. I run a fund in the water sector. It's a growth stage private equity fund that invests in Africa and in Asia. We cut checks to private businesses who are looking to provide drinking water solutions to underserved communities. And I'll give you an example from, say, one of the companies that I saw during my pipeline building exercise. A small water kiosk operator in rural Uganda, right? Strong local presence, expanding fast. If you speak to their customers, they would tell you how much of an impact they're having and how happy they are. But you go a step forward, they could not produce audited accounts. They had no digital billing. They lacked credit history. So from an investor point of view, that's not bankable. But from a development lens, that's a high impact potential, right? So this is where we need to act, which is fund preparation, not just deployment. Project development facilities, pre-investment, technical assistance, and business model support. All of these are a part of the blend, but they're often underused. When we think of blended finance, we often just think of, de-risking. But can we move away from that language and also think about investing in project preparation? So that's one. Second, I would say is that the question around how do we make financial structures that reflect the realities of water. Water projects don't fundamentally behave like solar farms or fintech, where we have seen blending work in the past, because water projects take longer to break even, the revenue is volatile, risk is shared with users, governments, and the environment, which means that we need capital structures that recognize this complexity and reward performance and not just repayment. right? The fund that I was talking about, Water Fund, the Water Access Acceleration Fund, one of the things we've done there is that in addition to the classic private equity fund structure, we built in an impact performance incentive. It's a financial reward to the fund manager if we meet clearly defined impact threshold, not just financial threshold, such as reaching underserved population or improving affordability. But the thing here is that reward only actions if we deliver on the fund's mission, and that aligns incentive. It reinforces the idea that success isn't just financial, it's also social. The final point is around the fragmented use of language of impact. Water is just notoriously hard to measure across projects and countries. I mean, it's the same issue that we face with climate mitigation versus climate adaptation. Mitigation is easier to measure, adaptation is very difficult to measure. Water sits in that climate adaptation bucket in many ways. When I look at companies, one project would report on number of households connected. The other one would report on liters distributed. The third one talks about coverage zones. That makes comparison and confidence really, really difficult. So what we need to do is the work, for example, we did with one enterprise in South Asia. They were doing incredible work, but they could not disaggregate their data by gender or income. Right? So we worked with them, actually, we provided them with pre-investment technical assistance to actually be able to gather some of this data and report back. But for many other investors, that's a missed opportunity that would just render a project unbankable. Right? So to bring in private capital, we need a shared practical language of outcomes, standardized KPIs, metrics like, of course, liters that are being distributed, but also criteria around affordability, criteria around gender, criteria around climate. But that has to be shared, right? So that it's not abstract, it's tangible and investable. So what needs to change? We need to, and I love to use this analogy, which is that we often look at blended finance as a shield when we think of it as a tool to de-risk, but we don't need to look at it as a shield. We need to look at it as a bridge. It's a bridge between public and private capital. It's also a bridge between risk and reward. It's a bridge between impact and return, and it's a bridge between vision and execution. So how does this work in practice? Governments and MDBs absorb the risk that they are best placed to handle, which is regulatory, currency, political. Private investors, innovation, scale, discipline. And fund managers like me, we need to be held accountable, and not just for returns, but also for social returns. Because at the end of the day, blended finance is not just about reducing risk, it's also about increasing value for everyone. And that's the lens, I think, that we need to take into account when we look at blended finance as a solution to scale water challenges.
Thanks, Kabir. I think you brought, I like the way you put it as bridge, so acting as a bridge, but also you bring it at like low risk, low impact as well, and the question of bankability and affordability as well. And that make me thinking about like Islamic finance. So yesterday we heard a lot about Islamic finance in the morning as well. So taking the challenge we are seeing in the blended finance and the request for like restructure, how Islamic finance can support restructure, but also allow that or support that scaling up finance for water. Adnan, what is your insight on this?
Thank you very much, Ahmed. Appreciate it. And I would like to start with thanking the organizers, of course, OECD and Islamic Development Bank, and inviting me as well as part of this panel. Before I was preparing like any one of us were preparing before coming to the panel. But I also had in my mind that I would like to listen to other panelists and see if there could be a better value add to my intervention in that. I guess what I have heard so far, I'm hoping to hear more from my other colleagues as well. But I have been taking some notes, and I think if you allow me to respond to your question, so I can create some connection to what we have already been talking about. In the end, we want a common message to come out of this panel too. Few things I have picked up. And if I were to try and summarize in terms of the way I see and we see in my role as well, is that Islamic finance, if I may start with, first of all, those of us who are not necessarily as familiar with what Islamic finance is, I would like to make it simple for them to understand. If you understand what finance is, understand what Islamic finance is. That's as simple as that. It's just another way of financing. That's it. So you don't have to think too much about it. It is leave it for the experts to sort out how to structure Islamically. That's not what you need to really understand, at least for most of us. So with that, I think there's a big role Islamic finance can play within blended finance as well. I would like to refer to some statistics, for example. Over the last 10 years or so, in blended finance, and I would take your point of view as well, as you also mentioned, Yasmin, earlier, that, and you actually started earlier on that how to define blended finance. And there are different ways of looking at it. And I like, Kapil, your perspective on that, and thank you for sharing it. But Islamic finance, when you look at the data over the last 10 plus years, we have seen $231 billion mobilized using blended finance as an approach. How much of that was structured Islamic? Almost none. So this is one should ask this question. Is Islamic finance not at a scale where it cannot contribute? We need to try and find an answer to it. 2/3 of that has come from private sector. So why Islamic private capital owners have not been a part to it? In that blended structure, of course, about 10% is a blended in the form of grant money or those kind of things, but the other has also been concessional funding, the remaining 20%. So why have not Islamic development finance institutions such as Islamic Development Bank, and I'm not trying to point to the bank at the moment, but that's the only institution we can refer to. Why have they not played a role in it? I guess these are all questions which require for us to think through that does it mean that Islamic finance did not qualify to have a role to play in it? No, that's not necessarily the case. It's just that we haven't necessarily considered, or maybe, and I'm not trying to implicate anyone here. I guess those who have been leading it from front have not necessarily thought of it up until more recently, that Islamic finance is an important counterpart to engage with as well. This particular roundtable today is a testimony to that, right? So that recognition is coming. Again, to put the perspective in numbers here, Islamic finance industry is anywhere between $3.5 to $5 trillion in terms of the estimates today. And when I just refer to the other numbers in blended finance, very negligible, if any, there has been any contribution of that from Islamic side of it. Proportionately speaking, one would expect at least 2 to 3% of that global 231 billion to be Islamic, but that's not the case. So I just wanted to make this point and a case to all stakeholders here that it's very important, to your point, Yasmin, earlier, we all need to learn ABC of other counterparts, language. We need to be able to speak to each other and try and create those opportunities for each other for us to work together. But I like the fact, Kapil, when you said it has to be a bridge. It has to be a bridge. Blended finance from Islamic perspective, there's a natural synergy. If I were to start picking any of the SDGs we talk about water being a part, you will see, and we heard from the first session panelists as well, with references from Quran and Sunnah, that there is a natural synergy to what the fundamentals are laid down there. But we do not see that translating into the practice. Why do we not see that happening? Also because, in my view, because we have not necessarily, actively pursued the higher purpose behind the legality of Islam. And that is where the alignment lies. So we need to work together. I don't want to take too much of a time going into the philosophy. The first session was very deep and insightful on that. What I would want to, however, say is that the approach I would say Islamic finance would be better aligned to, and that for that matter, conventional as well. Just like Kapil, you mentioned earlier, that we need to have structural rethinking in place. Now, as a typical fund manager, a typical investor, we would look at managing risk and blended finance. For lack of better understanding, many people think of it as a de-risking tool. I would say its role as a de-risking tool should only come in later. So let's divide it into three phases. To me, Islamic finance, and for that matter, others too, we should look at origination first. That's where blending is needed too. So to me, the best use of catalytic capital is at the origination phase. That's where the appetite for the risk, the type of risk, and the ability to pick on the example you gave earlier, Kapil, or that very good business case otherwise, but not having auditable financials, and it's not a bankable case for that matter, would be taken care of, because you're using a funding base of a capital owner whose profile is different, who is not necessarily looking, whose aim is to actually make it bankable, not to find it bankable in the first place. So do the origination piece, identify and unlock the bankability potential in water-related sector as well, but it goes beyond too. And then transform using part of that capital to make it investment ready, bankable. That is where we should be using the blended finance in the meaning of de-risking. That's where you can bring in the first loss equity. That's where you can bring in the concessional debt to provide a de-risking mechanism. That's where for the senior debt provider, you can have a guarantee put in place as well. It will make sense for everyone because it's already bankable. So we need to have that bridge covered first using blended finance as an approach, and which is what I see will be the case here. To end my sort of views on that, I would say is, and where I started, that think of Islamic finance similar to what you understand of finance otherwise, and there's a relevance to it. The thing is, because structurally speaking, conventional finance structures they're structured in such a way that even if Islamic finance or Islamic capital owners wanted to come in, they couldn't. So I'm trying to explain what has been keeping them out. Because whatever has been offered as a potential opportunity for Islamic capital owners to come in was structured conventional to start with, and hence Islamic capital owners could not be a part. The other important part is, like conventional counterparts for many, a lot of what was presented was not bankable to start with. And if it is not bankable, then the commercial capital owners will not be able to come into it. So we also need to think that as a genuine, limitation and constraint. And finally, where I see Islamic finance industry to actually contribute to this more meaningfully, even if it is structured Islamic, is when if we start seeing more of a venture capital play, when we start seeing more of a private equity play, which is what at the moment as part of the global industry is very limited. That's what we need to encourage. I believe that if and banks, by virtue of them being banks operating in a conventional banking system, they have a lot of limitations on them to do it from their own balance sheets. But if we do it off balance sheet and have them participate through those structures, they will be encouraged to do that as well. Venture capital and private equity play would potentially be a way forward to me for Islamic finance to contribute more meaningfully into this space. Last but not the least, there's a lot we can do in our program as well. That's what we are aiming to do, is that within water, there's a lot to do. I mean, Professor Mahmoud, you mentioned a very good point earlier in the first session, that we need to think of it not commoditizing water for that matter. I appreciate, and it's absolutely right. I would say that the water, which is more from a public good perspective, is one part. And you also referred to agriculture or irrigation, and a lot of other work on the commercial side of it. That is where there is a scope for commercial capital to come in. Let's create a balance there and make it work there. we would say that let's create a balance between social capital engagement, the public sector can come in philanthropic for where the water needs to be something made available to everyone at masses. But the other part of it, which has a commercial angle attached to it, let's create a balanced commercial approach to it, and let's all contribute towards water engagement into the water space and make it available for everyone across the board. Thank you very much.
Thanks, Adnan. And I yeah, there is a lot we can do. I think what we have heard so far open a door for many areas that we really need all to work together to make it happen. And of course, to work all together, we cannot work without the government. I think government really providing that enabling environment. And that takes me to Dawlat. What are really the enabling conditions to attract more private investment in the water sector to leverage blended finance? And what could be the role of the government? I know you have some slides to share. Yeah, please. I hope it's ready. Can we get the slides?
Assalamu alaikum wa rahmatullahi wa barakatuh. Dear colleagues, I'd like to make a short presentation and show the results of the mutual work with ISDB, if you don't mind. Dear distinguished colleagues and participants of Roundtable, honorable OECD and ISDB organizers, dear Ahmad Al-Mahdi brother, on behalf of the Ministry of Water Resources and Irrigation of the Republic of Kazakhstan, let me welcome you to today's roundtable. I'm honored to present you the key directions of our ministry's work within the framework of the project Development of Climate Resilient Water Resources, financed by Islamic Development Bank. The initiative stands among the most ambitious undertakings in the history of Kazakhstan's water sector, and carries strategic importance for the sustainable development of the country and accelerating climate change. Like many around the globe, Kazakhstan is increasingly facing significant challenge in the ensuring water sustainability under the pressure of changing climate. Today, the total volume of Kazakhstan's water resources is estimated at 106 cubic kilometers, nearly half of which, 47 cubic kilometers, enters the country from neighboring states. You can see it on the slide. The most vulnerable basins include the Aral-Sirdarya Sea on the south, Euro-Caspian on west, Shutalas on the southeast, and Batash-Alekol. And you can see percentage of external dependency of water. In this context, effective water resources management requires not mere modernization, but fundamental systematical transformation. According to experts' forecasts, appropriate measures are not taken in due time. The projected water deficit by 2040 could reach 12 to 15 cubic kilometers annually. In this regard, to ensure comprehensive preparation for the project development of climate resilient water resources, an appraisal mission of the Islamic Development Bank was conducted in Kazakhstan from July 10 to 19 last year. And first of all, I'd like to thank Brother Ibrahim, Shukri, Bahadur, and Brother Begzot for this effective work. The mission involved an in-depth review of proposed projects and included throughout technical, financial, and legal evaluations. As a result, key project initiatives were finalized and endorsed for inclusion in the financing package for phase 1. In the medium term, Kazakhstan has set a goal to build 20 new and reconstruct at least 15 existing reservoirs, as well as repairing and digitize at least 3.5 thousand kilometers of channels. As a first stage, as part of the project with the involvement of funds from Islamic Development Bank, it's planned to build and reconstruct reservoirs and 115 channels with a length of 3.4 thousand kilometers in 7 regions of Kazakhstan. You can see it on the slide. Automation of processes, personnel training, and equipment with necessary equipment will also be carried out. At the same time, the contribution of government of Kazakhstan to the project will be estimated at around $165 million US. At the second stage, it's planned to implement 24 projects totaling $1.3 billion US. I would like to emphasize that the work begun by the government of Kazakhstan and the Islamic Development Bank to implement the planned mutual work will reduce unproductive water losses during transportation from 50 to 25% in the future. Increase available water resources by 1.4 cubic kilometers. Increase the area of irrigated land by 250,000 hectares. Reduce the threat of flooding of 134 rural settlements with a population of 207,000 people. And reduce the country's dependence of neighboring countries for water supply by an average of 25%. The project also includes soft component, the modernization of research institutes, the training of highly qualified specialists in water sector, and the introduction of digital technologies. Also, I would like to note that the general agreement was 1.1 assistance in the amount of 3.5 million grant was essentially signed last year. And this agreement paves the way for the implementation of the first phase of the project, which will be an important step toward improving the water infrastructure and sustainable development of Kazakhstani water sector. Dear colleagues, I can say with confidence that the joint projects initiated with the IsDB demonstrate our active actions and adaptation to climate change, as well as our commitment to sustainable development and addressing climate change issue. We highly appreciate the trust and cooperation of all our international partners and express our great gratitude for their contribution to the development not only Kazakhstan water industry, but the entire economy. Thank you very much.
Thank you. So I think like seeing this big investment in Kazakhstan, can you in 1 or 2 minutes, like what type of enabling environment you have put in place to mobilize that capital or that finance?
Dear moderator, I'd like to say that it's important to keep in mind that the water should not be approached as a medium-term commercial enterprise. And as we know, the return of investment is not directly comparable to the final outcome. And the water, whether it's drinking water supply system or an irrigation project, water always yields a positive and multiplicative long-term effect at macro level. And only one example I'd like to share with you, it's concerning blended financing. We see that the Islamic Development Bank has taken the lead in this initiative. In collaboration with the Ministry of Water Resources, Islamic Development Bank financial instruments such as Ijara, Qard Hasan, it's a soft loan, and installment sale will be used in this project. And partner organizations such as UNDP, GIZ, Asian Development Bank, Agence France de Développement, and others will contribute to the blended finance mechanism. And we also, as I told to you today morning, it's very important for us to attract also Green Climate Fund in this very important mutual work to make as today's colleague said, to find our attention focused not to get some profit, but to upgrade social prosperity of the people. Thank you.
Thank you. I think like I wanted to go to Dr. Asma, being sitting listening to like the private sector, the asset managers, the National Development Bank, the Multilateral Development Bank. and everyone really playing a role in that space to be able to structure or using the blended finance, but also use it as a vehicle to scale up investment in water sector. From your perspective, how South-South cooperation and reverse linkage can really support the scaling up of blended finance for water sector?
Yes, thank you very much, Amgad. First, I would like to extend my deepest thanks to the organizers, OECD, and the Islamic Development Bank. It's really a pleasure and an honor to be able to address this during this event and talk about something that is really getting more and more attention in the water sector. So it's very important that we bring it to the attention of the financiers and see how we could actually use this South-South cooperation to bring in some new ideas, and I want to say some new blood into the discussion that is going on. So we've heard during this last couple of days that technical assistance is key for scaling up blended finance. But again, the question that we could ask, if we all agree on that, why is it that it hasn't worked so far? So here also, maybe we need to think a little bit out of the box and see how are we dealing with technical assistance and how can we design new mechanisms that would fit better the needs that we have in front of us. And this is giving me the opportunity to present to you what we call the South-South cooperation and focus on the reverse linkage mechanism that was established with the Islamic Development Bank. So actually, this is a technical mechanism for South-South cooperation that facilitates the exchange of knowledge, but also mobilizing resources and expertise between South-South countries, which means that we build on the similarities in development challenges and opportunities in such a way that we can come up with solutions that are real, that are in the ground, and that are sustainable. So these mechanisms usually focus on capacity development and technology transfer. As I said, they have proved that they can provide the enabling environment for water investments and that they can open new opportunities both for public and private stakeholders. And here I would like maybe to bring the perspective from water utilities. So I mean, from water utility, I can say that often we need to improve the performances of water utilities. We need to improve performances through technical assistance. We know that often utilities fell into cost recovery. They don't manage to set their tariffication, so low tariffs, and operational inefficiencies sometimes, such as non-revenue water quality, can really bring some barriers into the sustainability of the utility. So in this context, how could South-South cooperation and reverse linkage support the scaling up of blended finance? So we see two main directions. As I said, first, sharing the knowledge of technical expertise and best practices. And this can happen at many levels. We could look into projects, and we have done, that can help actually structuring the financing, risk mitigation. We have done this in a very successful project with Guinea. So it was a project between ONI Morocco, IsDB, and Guinea for a wastewater treatment plant, where the reverse linkage mechanism has started from the planning, finance mobilization, implementation, and evaluation of the project. So the entire cycle. We could also use these mechanisms for soft aspects, such as institutional reforms. And I just heard this morning, this is a good news, that we just had a project approved with the Commerce. So between Morocco, ISDB, and the Commerce. And this is among the priority actions in the Emerging Plan Commerce 2030. And this will really focus on tariffs, on reforms for tariffication in the water sector. A third aspect that can be really smooth these mechanisms is just sharing of best practices. So I can think of the project of desalination in Casablanca. So this is the biggest desalination plant in Africa that is set through a PPP. And today, this project, we are really willing to see how we could share this experience with others, especially that this is really bringing many keywords on the table. So we have water, we have finance, and we have sustainability, because the plant will be entirely powered by renewable energy. So these are also some very good examples that we need to share and actually look how we could scale them up. So last but not least, I would like to emphasize on capacity building. So when we say capacity building, and this is why it's important to actually look at it from different aspects. Capacity building for utilities, I've mentioned that, it's important. I mean, we need to help utilities be more bankable, have more creditworthiness. But we should not forget also that we need capacity building on the side of the commercial financiers. I mean, when mobilizing finances for water, it's very specific. Water and sanitation utilities have very specific needs. And often financiers are not really familiar. So we really need to reach out and maybe look into how we could build capacity to change behavior, but also to adjust the lending practices of financiers to the needs of water and sanitation, be it blended finance or other ways of financing. So this is what I have to say, and I thank you again for your attention.
Yeah. Thanks, Dr. Asma. I think capacity building, it's really like one of the key aspects that really require in this region. And capacity building, not just of like project design, but also for set the enabling environment, structure the right finance, speak the ABC for other partners. I know that time is really working against us, but I wanted to give the opportunity for the floor here to share some questions or insight. I also wanted to remind the participants online to put their questions as well in the chat, and we'll be able to tackle one or two from those online.
Thank you very much, Amgad and panelists. My name is Moaz Alawi. I'm working for ICLEI, but I was former central director at the Tunisian water utility. So I thank Asma specifically for her outputs, and I would like to emphasize on capacity development and enhancing the capacities of public sector in terms of financing financial issues specifically, just to have the same understanding as the private sector and the banks in terms of PPPs and the blended finance. In addition, I want to share another experience from Tunisia. So in 2009, the Tunisian water utility, which is 100% public, decided to create a subsidiary called Soned International. So Soned International is a private company created by this public company, and now we are working in Africa in different countries. We just got 2 years ago a contract in Benin, a concession contract to implement water projects in rural areas. So this is a different way of making business, I think, because we are providing our expertise as public utilities to other countries. It's a South-South cooperation. We are making profits, but it's not perhaps the first or initial goal of this cooperation. So perhaps I think such initiative could be encouraged and promoted. Thank you very much.
Thank you. Another point there.
Thank you very much. Hello, everyone, and thank you to the panelists for the very engaging session. My name is David Ikwamen. I'm a senior investment manager for the Resilient Water Accelerator. We're a technical assistance facility established to boost investment into the water sector, particularly early stage projects. I'd just like to agree with some of the points made around an enabling environment. I think a regulatory framework that supports investment into the water space is key. Transparent procurement processes are also very important. But beyond this, I think we also need to look at enforcement. Because if these frameworks and policies are in place, but investors, financiers don't have the confidence that the governments and the public sector can enforce and are willing to enforce those regulations and policies, then there'll be no investment into the space. And then secondly, I'd just like to ask a question about incentivizing concessional finance in areas where it's actually needed the most. So what I observe, particularly in the global south, is that there is a lot of concessional financing going into areas where it may not necessarily be needed the most. You know, well-established sectors and industries where the cash flows of those projects are more than adequate to meet commercial financing terms. So how can the investment community financiers work together to incentivize concessional financing, collaborating with the commercial banks in those locations to direct investment to where it's actually needed, as opposed to the more comfortable, already established industries where there's adequate cash flows to meet, you know, repayment terms of investors? Thank you.
Thank you. You would like to take that now?
Thank you, David. Spot on. And I think if I may try and answer your question. So just to give you a bit of a background in the approach we are having, so in our Global Islamic Finance Impact Program for Climate, Nature and Development. So the way we believe is that to incentivize this catalyst capital to actually do the right thing in the right fashion, what we really need to do is make sure that it goes into, you refer to that it's not necessarily going into the sectors which really deserve it the most. So that's precisely how we look at it. So we would, for example, in our program, we have a focus on both mitigation and adaptation. Adaptation is more difficult. So what we want to do is we want to work from with project owners, small scale as well as big scale. So we are not intending, in our case, we are not going to use the catalytic capital for those projects where cash flows are already there. So you don't necessarily need to provide cash flows, that kind of capital to them, but there's more potential. Renewables, for example, that's not where you would want to put it. So you would rather put it into water, for that matter. Yes, irrigation, we're talking about wastewater treatment, we're talking about clean tech and so on and so forth. The idea here is, geographically speaking, it needs to be in the right regions. Cities are squeezing already. So South-South is also, I mean, to Asma's point, South-South cooperation is important. So what we believe is that this catalyst money needs to become a catalyzer to create a pipeline of bankable opportunities across all these sectors and evenly distributed where they're needed most. And two, it needs to create a business case for it to remain sustainably continuing. What I mean by it is that the commercial capital coming in to buy into those, I mean, when we offload these opportunities, having made them bankable, that commercial capital would give an exit to the capital behind, which was catalyst to start with, because we need to have a sustainable model for that as well. So incentives for catalytic money is that they should remain there continuously, because continuity is important. One-off, we can get it, but continuity is important. And hence why the way it needs to work is every single dollar which comes in a catalytic role to start with must be given an exit in a commercially viable manner by the commercial capital owners. That's where the incentive lies. It is not about how much of a financial reward they get. It is more about their ability to continue to create that that pipeline on an ongoing basis. So the commercial capital is always hooked to that equation. That's where we believe is the right way to incentivize it. And we see a lot of potential for that happening in South, because South has been a late entrant from catalytic capital perspective to the whole equation. North has been leading it before, and here we have an opportunity to do it afresh. Okay?
Yeah, thanks, Adnan. I will come back to you, but I just wanted to come to Yasmin, and just to try to really, in 1.5 minutes, all right? Want to address that question, and there is another question for you, taking the interest from financial sector and impact investor in nature and biodiversity. How is the ISDB rethinking the theory of change and strategic planning for water security project? So I wanted to address this in a very challenging, in 1 minute, and 30-minute message, final message from your side.
So I'm not sure if I can answer that one in 1 minute, but let me just have a go at a couple of points. Firstly, on regulatory frameworks and enforcement, just like to add there that the way we structure some of our policy-based lending really aims to try to work with a sequential approach where governments need to demonstrate the achievement and adherence to certain regulations before the second tranche, and we're talking about major financing, would be released. So we're really looking at a sequential approach. And then just going back to the point Adnan made, using technical assistance to do diagnostics, analytics, and ensure that governments are made well aware of where those avenues are for financing, and bringing in private sector, such as payment for ecosystem services, ecotourism for revenue generation. On the question there about biodiversity and water security, I think it's very much tied in with the use of water and water for nature, water for environment, and doing, again, the assessments and analytics at a country, basin, sub-basin level to be able to drive the solutions and answers. Takeaway message, let's learn to speak at each other's language. We've done it for climate, we can do it for finance.
Yeah. Thanks. Speaking other people's language. Going to Kabil, I will come to you.
Okay.
Yeah, please. Going to Kabil online, I know you've been raising your hand, but also I want you in that 1 minute and 30 seconds. 30 seconds for last message and 1 minute to give your comments, but also address that question to you as well. You have been talking about like blended finance for like de-risking and bankability, but also talking about financial return. Where in the narrative is that emphasize on development outcome?
Thank you. Very high for us. I think the way we think about all of our funds or all of our investments is that there has to be a positive social or developmental outcome alongside a financial return. And I believe many people in the room who are investing, I look at the various MDBs and in the room, also look at the development impact of every single every single investment they make. So there, I don't think we speak a different language at all. So there, I think we're all quite aligned. Two additional points I want to make, and I want to borrow from what Adnan was talking about earlier. I think one is that there's an important role that intermediaries need to play. And intermediaries, I mean, I include people like us who are fund managers, but also all kinds of intermediaries when it comes to making sure that South-South cooperation or North-South cooperation happens, where you want to really target some of the most difficult to reach sectors and segments. That's where intermediaries' role come in, and they can really help bring that concessionality to the next level. And second, and the last point I would make is around that question of concessionality is something that a banker once told me at one of the DFIs that we work with, as a light remark. They said, if you entrust me as a banker to provide concessional finance to a project, I'll never be able to do it. Because for the last 20 years, I've been analyzing projects with a certain lens, which is around their risk reward. Right? So if concessionality is really something that institutions want to provide, they need to think of it from first principles ground up and build teams whose job is to actually provide concessional finance, which is different from your classic commercially oriented banking colleagues.
Yeah. Thank you, Kapil. And coming here to Dalit, please.
I'd like to make one short remark. I see that everybody is tight, but it's very important to say that before last year, the interest to water sector in Kazakhstan wasn't so high. But thanks to ISDB's for financing, and as I present our presentation concerning climate resilient water resource development project, now we can sure say that we are open a new history of blended financing, because we see that this project creating an ecosystem, and a lot of private sectors, including Chinese companies and private commercial banks and private institutions, they are interested in entering in water sector of Kazakhstan, opening small hydropower or just financing channels that then they can sell the water to agriculture, etc. So it's very important to make a very serious steps toward the financing. I mean, globally, as an it's a good example of ISDB. So they made a huge step, and now they are like a locomotive, and all other institutes following them, including banks, entrepreneurs, etc. Thank you.
Thank you. And may I go to Adri, 30-second last message from the National Development Bank.
Yes, thank you, Mr. Moderator. Since we are mostly working with the municipalities, in this case, I think at some point how to bring their commitments on the sectors, right? Yes, we can try to help them structure a more suitable blended financings, but in the end, if there is no commitment from their side, this will be an issues. From the participant, there's a remarks on enabling environment. I think I also agree with this. With those enough regulatory frameworks, technical assistance that we can pour to this municipality, I think it will go nowhere. So I think 3 words: enabling environment, on regulatory frameworks, on the technical assistance, as well as on the commitment of the local leaders must be a key factors on this. Thank you.
Thanks, Adri. And Dr. Asma, 30-second last message.
Thank you very much. I've talked extensively about South-South cooperation, but what I would like to emphasize here is that innovation can also happen in other types of partnerships. So mainly North-South, North-South-South. So there is real great potential to tap into in such a way to design the right approaches to do so. Just maybe a last comment on incentivizing the commercial financials coming into the water sector. I think that also this integrated approach, now that we are dealing with projects that involve water, energy, irrigation, is really key moving forwards. I'm mainly thinking about large-scale desalination plants that are serving both potable water and irrigation water that can also be powered with renewable energy. So this is really something bringing into the dialogue multi-stakeholders that can facilitate financial schemes.
Thank you. Adnan, last message from your side.
Well, I guess I took a lot of our time already. I would just want to say that this is high time for all of us to collaborate. Collaboration is a key. We are as good as we are as a team. Individually, we can only do so much. So I would definitely suggest that, and particularly South and North to collaborate, and Islamic finance to collaborate with conventional finance, and Islamic to collaborate and blend in with everything else around this whole ecosystem. I think this is the message I would like to leave here. Thank you.
Thank you. I think it's a very clear, it's a very rich discussion. And if we look at the blended finance, I think it's one of the vehicles to scale up investment in the water sector. And it's very clear there is a role for every partner that can really need to play to make that blended finance as a mechanism is working, and also can scale investment in the water sector. I think we will never finish that discussion, but of course, time is against us. So please put your hand with me to thank our panelists for their insights and comments and taking all the questions. And thanks to you for your active participation as well, for people online, and of course, for the audience in the room. Thank you, everyone.
Yes, excellent, excellent. And please, if you can come forward for the picture.